Hi traders, welcome to another episode of Smart Money series. In this video, we are going to discuss about how Smart Money played their game today. Let's get into the video. And before that, I am not a SEBI registered analyst, and whatever the information and analysis shared in this video is only for education purpose. And I am not responsible for your profit and losses, and consult your financial advisor for any trading related decisions. Okay traders, now we will get into the video. So yesterday video itself, we have seen that the price actually reversed from this daily fair value gap, and it is likely to move towards this weekly time frames liquidity level, which is present around 24,474 levels. So today market opened around 20 points gap down, and it was very choppy, guys. In price action, you may see it is a 200-point fall, but it didn't happen in a single phase. Actually, from morning it consolidated, and actually it get into the 15 minutes liquidity. It went and reversed from this 15 minutes liquidity, and it is a one-way fall, and price fell and actually broken this important level. Actually, in this level, you have see in 15 minutes there is a huge wick candle. It actually broken this low, and with a wick, it has a huge wick, and also this candle high. So this candle actually broken this 15 minutes liquidity. So this was a 15 minutes liquidity presented and created on yesterday's price action. So this was broken in this 15 minutes candle, and after this the buyers showed some strength, and they are trying to push the price higher. But after that, what happened in this candle? It was a very choppy price action. It moved nearly from the low to high 85 points within 115 minute. Okay, so it went and break this high, this candle's high, and struck the liquidity there, and also it went below this candle low, and the in downside also it struck the liquidity. So it hits the stop losses right, left and center, and then it give a good retracement, and these all are a choppy price action, guys. So whenever you see these kind of rejection candles with a huge wick on both the sides, you need to be very careful. Okay, so which means it has a choppy price action within this candles range. So if you see within this candle range, after that the price moved 50 points, and then another 15 minute choppy candle, 76 points move within 115 minutes candle, and then it fell in one direction and closed at the lowest point of the day. So this is what in intraday actually happened. So to summarize, it went to previous day's 15 minutes liquidity, and then reversed from there and closed at the lowest point of the day. And before that, this 24,634 levels previous day low, as well as 24,654 levels previous day's 15 minutes liquidity acted as a support, but it can't hold the price today, and ultimately price fell. But if you go to 1 hour time frame, it is a clear break of structure, guys. So whenever this okay, I will delete all the lines so you will understand more clearly. So whenever this 1 hour liquidity got broken, okay, so price formed a new break of structure. Okay, so this low was created by this high. So now this 24,956 will become your new change of character. So previously, when price travels around this range, price needs to be bullish only after it crosses this 25,254 levels. But when you see this kind of break of structure, a new low high will be formed. Whenever the new low will be formed, it also creates new high. So now this 24,956 will become your new high, and whenever price crosses this in 1 hour time frame with a good breakout candle, 80-20 candle, so you can consider it as a trend reversal. So when price crosses the level, it can easily reach up to 25,254. That is our theory. That is how smart money works. But before reaching this level, it needs to get the liquidity from either higher time frame, which may be in 4 hour or 1 day. If you see, it is a 4 hour liquidity is present here, but this candle is not actually a original candle. Whenever you see in daily time frame, it is a trading view glitch, guys. Be aware of it. actually the candle opened around 24,472 levels, and it actually swept the liquidity present over here. 24,500 level liquidity is already swept. So we should not consider this 500 as a good support. Don't believe this. And the main liquidity is now present at 24,461 levels. So if price needs to cross this 24,950 levels, it should respect and reverse from this liquidity with a good rejection candle. So without touching this liquidity, if price move to this fair value gap or this liquidity levels, it is ultimately like to fill. So if it goes here and sweep the liquidity and reverses, it may touch this liquidity, and it has the potential to break this liquidity to move further because it swept the stop losses present here. But if price reverses from here and if it moves to the upside direction, it is likely to reverse from this 1 hour fair value gap. If further move, if it reaches this 1 hour liquidity level, it will fall from here. So this is how we interpret the markets. So if it fall directly from here, and the another scenario, what will happen instead of reversing from here and if it falls from here? So we can expect further the market to fall to the next level of liquidity. So we will see it in 1 hour or 4 hour. So let's consider in 1 hour time frame. The next level of liquidity is this swing low, which is present at 23,953. So the breaking of this level will push the price towards this 23,956 levels within short span of time, because it is a huge downside move, but this move did not happen in seconds. Like it didn't fall like very quick time. It is a proper way of consolidation, proper retracement, 50% retracement, even sometimes 75%, 100% retracement, and then it fell. So it is a proper fall. So breaking of this level will create panic among the buyers, and they will maybe they will sold the positions quickly. They will exit from the long positions quickly, which may ultimately give a quick move towards this 23,953 levels. But as per my assumption and as per my analysis, I am still having strong conviction that the price will reverse from this liquidity levels mostly, because always daily time frames liquidity holds the highest probability to reverse the price. Okay, and this is a good consolidation zone, guys. So within this consolidation, the price traveled from 12th May to actually 16th June, or let's consider 24th June. Nearly 1 month of consolidation has happened around this range. There are lot of liquidity is present here, and all the liquidity, ultimate liquidity is present at 24,461 levels. So there are 80 to 90% chances and probability is there, which is price will reverse from here. So market is not 100%, guys. So I am predicting that it may reverse from this level, but I am not holding any positional trades. I don't have any shorts or I don't have any longs. I am just giving my view and how market behaves and how smart money works. So there are two possibilities. One is price reverse from this 24,461 levels. There are 80 to 90% probability for a reversal, and 10 to 20% probability is there even price will break this range and give a quick fall to this 23,950 levels. So this is what going to happen in the upcoming week. And if you see in weekly time frame, there are 1, 2, 3, 4, 5 continuous weeks of fall. So where did we see this kind of fall earlier? So this is where when market touched the all-time high, it gave a continuous fall 1, 2, 3, 4 weeks only, but it was 7% fall. But here it is not 7%, it is 4.5%, but still all are red candles. It is an alarming sign, guys. But ultimately after the 4 weeks of fall, give another inside candle and then give another break, and then see, this is the kind of retracement we will witness if market fell continuously. So the same kind of reversal may happen if price touches this liquidity by Monday by opening a gap down, because already all over the world, all the world markets are actually crashing. US futures are crashing already. I think now the market has opened, so cryptos are crashing. You see all the cryptos. Bitcoin is actually give a good pullback, but now after the US market opens, it also crashing. and you see Dow Jones is down over 1.3%, S&P 1.5%, Nasdaq VIX was increased 20%, guys, crazy. Nasdaq is down over 1.7%. 10-year bond is falling. There is a very good news. Nvidia is 3% down. US oil 0.5% down. Apart from this Trump tariff, there is an economic news also. So today jobs data was released, but it failed to meet out the expectation. So see, sorry, here. So the forecast is 106k non-farm payrolls, but here it came only 73k. So there are no new addition of jobs, which signifies that their economy is doing very badly. And also see the manufacturing PMI also fell. So the forecast is 49.5 and previously it was 52.9, but the actual value came as 49.8. But this is not a very expected data because US economy is not a manufacturing economy, it is a service economy. So this data is not worth to shake the markets, but this data, this non-farm payrolls and unemployment rate will actually have a big impact. Along with the Trump tariff, it also added fuel to the fire, and that is why we are seeing a crash in the market. If on Monday we opened around with a good gap down, and if price touches this liquidity levels, so market will show its true colors and it may give a good retracement or reversal. So be ready for the retracement. As of now, there is no hope of reversal. That is what we are seeing in the price. It is falling. Every day it is falling. So whenever it tries to retrace also, it is giving a good pullback candles like this. So let's see, guys, what is going to happen. And I hope this analysis gives you good insights about the overall market structure and smart money. And if you like this video, kindly give a like, and if you have any doubts, comment on it, and I will see you in the next video, guys. Thank you.